What's up, everybody? This is Jimmy with Trading Decoded. It is April 3rd, 2024, and it's 4:04 in the afternoon. The market charted on itself today. Today, I was expecting to play puts because of what we were seeing in pre-market. So I got into my calls a little bit less aggressively than I would otherwise, only because I was prepared to take puts. However, we had very clear instructions on what we needed to see in order to take puts at the open. We didn't see those things, so we didn't play the puts. So we just had to readjust, wait for confirmation that the move was going to go up, take advantage of that confirmation, and make some money. I myself took two trades today. One was at our call line that we always make every day, and the other one was a pullback during a very big uptrend at the time, and playing it to what we wanted to find as the next resistance. For me, the first trade was a 25% winner. The second one was a 18.5% winner, and then I was done for the day. But let's go ahead and see what the charts had to offer, and we'll see what we got. So in pre-market, we were bouncing around, rejecting yesterday's high of day. Nothing over here to really pay mind to. And then we got in a relatively tight pre-market range. Oh, it wasn't really tight, actually. A little less than $1, 70 cents or so. And it seemed to hold as a pretty decent container, all things considered. But at 9.25, we had broken out of that to the downside. Now, our put scenario was a close below 517.43, but what we wanted to see was a rejection. So we prefer to see a pullback to resistance like it did in pre-market. Enter here so long as Qs were at resistance as well. That's critical. And then we were hoping for a move down to 517.13. But here's the beauty of waiting for a pullback anytime. We know that there's support here, not only because we drew this line at 8:30 in the morning from a previous trading day, it was showing us that there was support there in pre-market as well. If you get in here with the right reasoning and you get down to this line of support, you're already in profit. You're more than welcome to take yourself out of the trade with profit. Whereas if you buy on support and it never breaks, you never got to see green even a little bit. Guys, that's the importance of pullbacks. However, our call line was a breach of 518.22. What we were looking for was a move from there to a minimum of 518.45. Not a huge trade, but if you got in a little aggressively or you got in because we closed above, back above this resistance right here, you got to make a lot more money than 25%. But what gave us the confidence to go ahead and jump into that trade? Besides the fact that Qs were moving up, I want to say ADD at the time was also moving up. But this right here, we wanted to see Qs hold resistance at 439.26 while SPY was going to hold resistance at 517.72. That would have been a reason we would have taken puts. We didn't get either one of those things happen, so puts immediately came off the table. Now we just needed to wait for the breach of that line if you're going to take calls, and our stop loss was a candle close below 518.10, so you're talking about a 12-cent stop, and you had many opportunities to get out at this line, above this line, but what you shouldn't have done, because you don't know what the 10 o'clock candle or those reports are going to bring, is held through this. Now I'm going to share a story with you guys because I think it's important. I think it's important because this deals with the psychological side of trading, which is the much more difficult part of trading that people want to forget. And they feed into their own psychological problems to justify stupidity. Now, I had a guy today miss the calls this morning and recognized that we had resistance here, completely ignored all the signs that we talked about yesterday. Remember on yesterday, we had a red heat map, red top 10, downtrends, red everything, and you had some people out there insisting on calls. Well, today you had the opposite of that. Very quickly, the market turned very green. Your top 10 went from a mixed bag to all green, and we were breaking levels of resistance, moving up. The market was happy today. Okay, the market was happy today. This gentleman missed the calls, recognized resistance here, saw resistance here, nothing wrong with what he saw, But what he was ignoring was how green the market was and the fact that ADD was moving up. It wasn't hard to see that puts were off the table. We talked about this before the market even opened. Guys, I'm interested in puts at the open or near the open because the pre-market's making me believe that that's what I should be prepared for. But we need the right criteria to take the puts. We didn't get those things, so now we've got to shift gears. So it's not that I have a problem playing calls, I just wasn't prepared soon enough to get in aggressively, which I have no problems with doing that either. We got a breach of the call line. We held above our stop loss. We made it to where we wanted to go. We had some people buy the pullback here. We had some people get in on the second candle. We had some people hold through this and caught this massive move to the upside. I'm not a fan of holding through 10 o'clock candles ever. Sometimes I do, but it's very rare. In this case, I ended up trying to hold for more because Qs did close above this resistance, and I was hoping the Qs were going to take us to the next one. I ended up stopping myself out somewhere in this range here, right around this blue line. But nonetheless, it was a 25% trade. But the original plan was to get in at the breach of this line, get out at the close of this line. It was old support, turned resistance. It held that line for a little while, and then we got close to 10 o'clock. Don't hold through this. But anyway, back to this gentleman. He's holding 5 SPX puts here because of this resistance and because of the Q's resistance. Fine. That's okay to do if you are buying puts at resistance. It's a counter trend trade simply because the rest of the market was pushing up. Okay? That's not a good time to be buying puts, in my opinion, but I can see why he wanted to consider them. Fine. He was up a few times, having bought at the right place up here, resistance, coming down to this support line multiple times, but he wanted to hold through 10 o'clock. Now, here's the problem. The reason he chose to hold through this was because he was just told that come May 1st, his company was going to be laying people off. This is where the harsh reality and the tough love for me has to come in. I'm not going to share with you a screenshot of our conversation, but the one thing that I told him was, because I say it all the time, guys, and I said in his case, the market doesn't care about layoffs, not your layoffs. Just because you want to make more money, because you might be on the chopping block for your job, should never be a reason that you justify holding through a time you know damn well you shouldn't be doing. You took a gamble. It cost this man almost $5,000. That trade lost him $4,900 because he held through this candle. Got toasted. Guys, that 10 o'clock candle is a big deal. It's always a gamble. But to take a risk like that when the market is showing you strength is makes it even more risky, more stupid to do. Okay? The market does not care what we want. It doesn't care what our financial problems are. It doesn't care how we feel. It doesn't care about our emotional state of mind. It doesn't care. It doesn't even know you exist. Respect the fact that you are powerless to this machine. Because when you can accept that, you will learn to respect it instead, and then you will be happy with taking what it's willing to offer. Trust me when I tell you, it does not care. It doesn't care that you don't think the economy is in great shape. It doesn't care that you need to make money. It doesn't care that you're holding puts in a massively moving market to the upside. None of it matters. What you need to accept is that it doesn't care and that it's just going to do what it does, and learn to play with it instead of fighting against it. It's the biggest thing you can do to make yourself a better trader. Can you make money on counter trend trades? Of course you can. Is it easy to acquire that skill? No, it's not. It's not. There are people who make a living counter trend trading. But I watch people day in and day out who are not yet good enough to even take conservative trades consistently, constantly trying to counter trend trade. Guys, wait for a trend to develop. Wait for a pullback during that trend that happens to line up with a line of support, not only on SPY, but better your odds by buying it because Qs are on a level of support. Give yourself double the probabilities of winning. Even then, it's not a guarantee that you're going to win. We talk about the 10 o'clock candle. We have alerts go off 2 minutes before 10 o'clock every day to remind people that this kind of shit happens at 10 o'clock often. If you want to gamble at 10 o'clock, take a smaller position size and play with one you can comfortably lose 100% of in case you happen to be in puts and this happens. At the same time, you might be in calls and this happens, and you're solidifying the idea that, hey, this is an amazing way to trade. I'm going to do this every time. You will blow up your account. That 10 o'clock candle is going to get you at some point, and it's going to hurt dramatically. Mark my words. Okay? Getting lucky does not make you a good trader. Okay? So when we have people, and I'm going to explain another situation here in the future. But anyway, we were moving up. We hit our first target high, or third target high once we got north of all these. Now, I don't chase this anymore. There was back in the day, I used to do that all the time. Wait for a breather, wait for a pullback. We developed a new support level here. Still wasn't ready to buy it. We pull up, found price action above our next target, pulled back to the futures line, held support there, held support here. Qs at that time, we're holding support right there as well. I'm not fighting the market. Let's go ahead and give it a shot. Now, what we were aiming for was the Qs to get up to this line of resistance, okay? 1026. SPY wasn't moving nearly as much as the Qs, but the reason that this circle is here is because Qs hit their resistance. So you got in here, you got out there. Now, I happen to get out here because we had a resistance that we had already built there, so we didn't want to ignore that. And it ended up being an 18.5% trade. Okay. Our stop loss was a candle close below that futures line. So we never got that. So you could have stayed in this trade as long as you wanted. Just know where you're going to get out if our thought process wasn't correct. That's it. That was my second and final trade of the day. And then we started to continue to put in higher lows until we hit 520.90. Now, 520.90 ended up becoming a very, very nasty level of resistance up there. It gave us the opportunity to draw our favorite red box that we had in a couple videos back. Guys, whether you want to buy puts up here, which I was not a huge fan of, okay, because of how strong the market was, or you should take your profits if you're in calls when we get to this box. You could do it one of two ways. For my put buyers, my counter trend traders, it was very simple. Enter your puts in the box. If you close above the top of that thing, you're going to want to get out of that trade. Very, very simple. Very simple concept. Okay? If you're in calls, when we get to that box, you're going to want to consider taking your profits. There has been a 100% chance after this moment here that we have not been able to get through it. 100% chance. So if you're in your calls here, probabilities say that's about as far as it's going to want to go. When you're in calls here, probabilities say it's a good time to take your profit. If you're in calls here or here, guys, go with the statistics, go with the probabilities, not what you hope is going to happen. Trust me, I would love to be in calls and pretend like this didn't exist so that we could just dilly-dally on up to 521.68. Do not ignore this situation. It's in your best interest. And if you're going to try to ignore it, move your stops up real tight so that if it rejects it again as it had done the entire day, you don't give up too much of your profits. Now, after we got up here, we start to get a pullback. Now, we talk about getting into puts If you want puts, at least wait for a level of support to break on both Qs and SPY. Okay, the first time we were able to close below a decent support level was right here on this candle. Okay, we turn that support into resistance. We move down. We're looking for the next target low. Okay, now if you didn't get out at that, the next one down is the futures line. Now, if you missed all of that, we moved down, we pulled back to resistance, but guess what was also happening at 11:57? Qs down, pulled back to resistance in a downtrend. Resistance in a downtrend. One more time. Downtrend, pull back to resistance. Downtrend, pull back to resistance. Those are good entry points for puts, guys. Gives you the opportunity to get in and get out if the next support holds. Whereas if you buy on support and it holds, you get out with the only option being red. Okay? We looked for confluence. Pull back to resistance on the Qs, pull back to resistance on SPY, but how do you know it's going to hold? You'll never know. You don't know. You're looking at the pattern, you're saying, hey, I'm going to take the chance in believing that this pattern has got more room to the downside. Means we're going to put in a lower high, followed by a lower low. Well, that lower low usually goes down to the next support level. Well, where's that, Jimmy? Well, it's all the way down here. Now, we didn't get there, but we built a new support level here. But guess what was here? Support on the Qs. In fact, we had an alert set right here on the Qs saying, hey, that would be our target if you're in puts. Wait for the beep. We got that beep here. It happened very fast. We got it back again here. That was your opportunity to get out. Okay, so you're in aggressively because we broke support. You're in here on a break of support and a pullback to resistance on both Qs and SPY. Our target was here based on the Qs. Okay, we find support there. We start to move back up. Oh no, we hit the red zone. So for those of you who are holding calls, I hope you took yourself out of the trade there. If you're interested in playing puts because you had the ability to have a nice tight stop, there's your entry there. You got an unexpected move. We were saying that if we can get below that level on the Qs, that we should move down to this level here on SPY. Well, would it be at all surprising to you if that move there made it all the way down to that exact spot? Just like it did here, only to hold and shoot back up? Nope. Okay. Then we got into a trade, or not into a trade, but an area of the chart that was very difficult to find anything to do in, right? We had a whole bunch of support resistance levels in here. Qs wasn't moving anymore. ADD wasn't moving anymore. It was just not a good time to trade. Once again, the red box has come into account. Guys, I'm done trading for the day, but as with 100% of the time before, if you're interested in puts, wait for the red box. If you're in calls, consider taking your profits if we get to the red box. Where are we looking to go from that rejection? Well, we'd like to see it get down to at least this support level at 520.53. That actually paid $100 per contract. If we get through that, we'd be looking for the next move down to 520.42. From there to the yellow line and so on and so forth. Okay, so again, enter, exit at the first support because it is a counter trend trade. That is my rule. If I get into a counter trend trade, I'm getting out at the first support level we come to, or resistance if you're in calls. Okay, we hit it again. We hit it again. Puts, take profits in calls, all the same routine. Down to support. We're putting in lower highs now. Okay, lower highs, lower lows. What happened here? Well, we broke a level of support that we had from here. Expecting that move to continue down to at least the next spot, which is why this circle's here. So if you got in because we broke a nice level of support coming off lower highs and lower lows, and then we got to another level of support, which we closed below, which hadn't been done yet on the day, was right here at 519.50. Okay, so at 519.50, you could have got out of a trade here, or you could have got into the next one because we closed below it. And you take it down to what? Well, Jimmy, that just seems like it's in the middle of nowhere. Well, it kind of is, but it's also when the Qs landed on their first support down. Okay, guys, what we don't know, and I say this in every video, is which one of these lines of support and resistance are going to hold. You'll never be able to tell which ones are going to hold and which ones are not going to hold. So you better make sure that you assume that each one can hold so that you don't buy 5 cents away from a support level and get stuck holding the bag if it does hold. Make sure there's room for it to move before you take the trade. We knew that if we got in here, the next support down was near this blue line. I mean, look, we never tested anything below that except that blue line. Okay, so if we can get through that and we believe that Qs, or SPY rather, can make it to its next support, well, that would take us to the blue line. Massive trade right there. Massive. Right? Give yourself a chance. Make sure there's room to move before you take the trade. Don't ever get into a trade hoping that a level of support isn't going to exist anymore. Make sure there is no level of support there that you need to worry about in the first place. It requires patience. Patience will pay you extremely well. Guys, you don't need to take a lot of trades per day. And just like I told you guys yesterday, we started with a 10-to-1 green to red ratio. For every one red trader, we had 10 green ones. We ended up closing at 2-to-1. Today was a similar story. We had a lot of people make a lot of money to the upside, and then we had a whole bunch of people go from green to red because they traded in a chop zone or couldn't walk away when they had already made the money that they wanted to make. Guys, you know what the best way is to stop a red streak? If you have a streak of red days in a row? It's not a trick question. After your first green trade of a day, just let it stay green. You can't stop a red streak until you stop adding to it. The only way to stop adding to it is by walking away the minute you're green. At least get it started. At least get the green streak started. Or you could keep going for reds. I mean, that's not you're not going to last very long doing that. All right? Stop doing what's not working, guys. That's the only thing I can give you. We talk about this all day, every day. People continue to do it. Fortunately, more and more people are learning that taking fewer trades, if you take the right trades, is all you need. You're minimizing your risk or unnecessary risk to your account by taking fewer trades. Be patient enough to wait for the ones worth taking, and then those ones will pay you enough that'll make you comfortable walking away. All right? With that said, we found support ultimately down here on our original call line. And it bounced back up, headed up towards VWAP, which it barely fell short of because VWAP was sitting right around here. We missed it by 2 cents or so, and right back down at 350, and then right back up to VWAP into the close. So that was it. Again, there was large portions of the day that was not worth trading. There were some nice moves based on Fed talkers and things like that, reports, things like that. But you should never anticipate moves like this because it doesn't make you a good trader to have gotten in, assuming that you were going to get a drop like this. Now, if you got into puts here because there was a reason to do that and you happen to be fortunate enough to catch a move like that, that wasn't skill. Getting into the trade at the right time was a skillful move. Getting lucky enough to have a dump like that in that short period of time, no skill required. And the reason I say that is because we had a member who got into their trade, okay, made 50% on it, sold out of it because he followed his trade plan, and then got upset at himself when he saw that same trade continue to go in his favor after the fact. Guys, it's hard to not look at what could have been after you've taken your profits and you got out of a trade. But let me remind you of this one thing before we stop this video. The hardest part about trading when it comes to emotions is sticking to, or first it's even developing a trade plan, and then it's even harder to stick to that plan. Getting in when you're supposed to, stopping out where you're supposed to, getting out with your profits where you plan to. Because the unknown is where the danger lies. The unknown. You might say to yourself, well, I'm going to take my profits there because the chart says that it's a good time to do it. You'll get out of that trade. You'll be up 50% on it, which, by the way, is an amazing trade. Okay? You're happy as a pig in shit when you've done that. And you should be. You followed your plan. You got rewarded handsomely for it. but then you watch it continue to go after the fact and you get upset. Don't do that, because you know what you're doing. You're telling yourself, man, next time I get to my profit target, I'm going to try and hold it, because the last time I followed my trade plan and got out where I was supposed to, I left a lot of money on the table. This is nothing you can anticipate. This is nothing you should be hoping for. If it happens while you're in the trade, awesome. But if you get into a trade thinking that just because you wanted to, this is going to happen, versus ignoring the solid support that you decided to take yourself out at, that's a losing proposition more times than it's not. Okay? I don't care what anybody tells you. Nobody knew the drop this big was going to happen. Nobody knew the pullback to this particular level was going to happen. Nobody knew that this drop was going to happen. If you waited for the right times to get into the trades, you got to be rewarded with the unknown that worked in your favor. But you always need to have the right reasons to get in the trade, and you better have the right reasons to get out of a trade, especially when it goes against you. And if you get to take advantage of the extra gravy on top, good for you. Good for you. But nobody can anticipate moves like this. Okay, unless you're playing FOMC, when you're just getting crazy moves to the upside and downside. And even then, you don't know where they're going to go, and you don't know where they're going to stop. You just got lucky enough to be inside of a big trade that moved really quickly in your favor. Get out with some good profit. All right. With that, we're going to wrap it up. Hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, there's a link down below. We'd love to have you. First week's completely free, and maybe you'll like it. If you do like it, I hope you learned something. And if you liked it enough, maybe you'll become a paying member. Help support me, help support my moderators and my lawyers and my accountants and the IRS and everything else. If you don't like it, well, I hope you learned something, but you're not obligated to stay, and you've lost nothing by giving us a try. All right. And that's pretty much it. So we do have some more reports and Fed speakers for the rest of the week, which might allow for some more volatility, more opportunities to make some money. And if you didn't catch it today, hopefully we can get some tomorrow. Thank you guys for watching. Till tomorrow, I love you guys. See ya.